The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the January 25th, the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that, well, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, well, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstances of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know I'm absolutely grateful for your presence here, but even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you can't dial in, but you've got a question, go ahead and send me an email. Send that to steve@tfnn.com. And if you'd be kind enough in that subject heading, please put radio show question. Of course, inside our Tiger's Den. Well, any and every ping will do. So let's go ahead and get this show started on wonderful Wednesday. This is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got all the U.S. indices trading to the downside, as well as the sectors with inside the S&P 500. The leader is the NASDAQ 100. It's off just over 2%, 239 points. The Dow's off 373. The S&P 55, Russell 20, semis off 53. That's about 1 8/10% to the downside. Gold is off about $5. Silver's off 4 cents. Light sweet crude up 43 pennies. Natural gas off 9 cents. A 30 Treasury printed out at 130.21. That is down 6 ticks. Leading the charge dollar-wise, the upside, you've got Market Taxes Holdings up 5%, $17. Regeneron Pharmaceuticals 1.5%, $11. Teledyne 2%, $8.60. Stride Inc. 26%, $8. Bridger Aerospace Group 68% or $7. To the downside, it's Solar Edge Technologies off $18, nearly 6%. BlackRock $19, 2.5%. Paycom Software about $19. Bookings about $19. MSCI Inc. about $18 to the downside. So we've got some movers and we've got some shakers. Of course, I want to look at what you want to look at. Let's try to figure out what's going on intraday here. Let's start by taking a look at the equity future contract. So at this stage here, nothing broken. What do you mean nothing broken? In the upper left-hand side, you've got the ES Mini prices trading between its rising and descending trend lines. It's trading with inside its profile. Nothing broken out here. Next move or next level of support for the ES Mini is at the 39.48 level. If you take a look at the NQ, it's pulled back. It's tested the top of its profile. It's tested its rising trend line. Definitely nothing broken here, but it's also tested its descending trend line. If we take a look at the Dow, nothing broken here. Price could pull back easily to the 33,204 level, maybe just slightly below that. You still have, it has a rising trend line. So nothing broken there, even though price is below the bottom of its profile. You've got the Russell 2000 consolidating with inside its daily profile, as well as its rising and falling trend lines out there. So that's a little bit of the bigger picture. The move lowers to be expected and anticipated. So what we're seeing here is nothing of a surprise. Number one, we had the New York Stock Exchange get into the overbought condition. We're talking extreme overbought condition. It topped out, or at least that technical indicator topped out on January the 13th out there. That was Friday the 13th. That condition needed to be worked off. Well, it is getting worked off as we speak. That was number one. Number two, let me do this here. Let me change this. Oh, shoot, I can't. Yeah, hold on a second here. I know how to change a chart without screwing up everything else. No instrument link. There we go. So let me do this here. I'll put up the NASDAQ 100, which I believe the NQ, the NASDAQ 100, is really the place to be watching today here. So another reason why we believe that yesterday's move lower was to be expected, as well as today's move lower. And if we take a look at just simply time increments out here, cool. We're using the TD9 count tool that I have, but we're using it in a different way. The different way is we're showing consecutive closes either above or consecutive closes below the prior day's close out there. The red ones are the prior closes below, and the black digits are the prior moves ahead. So just simply the Texas two-step, if we'll call it, which is typical out here. That doesn't mean you can't get offline and throw some more steps in there, as the NDX 100 did when it topped out after 7 consecutive sessions back on January the 17th. What did that lead to? A Texas two-step, a two-bar knee-jerk reaction. Many of these are two-bar reactions out here. Well, today will become bar number 2. Prices above its green oscillator and change line. That is a bullish signal out there. It's not that we can't have a third day of decline or even a fourth day of decline, just that on average, especially if we're in a new bull market here, which there's a possibility, we've got those A to B equals CD patterns that have been confirmed in a number of real key sectors and indices out here, then you should be looking at today being the end of the retracement. So we had the overbought condition worked off. We had just the normal Texas two-step that was going on. What else do we have? Well, if we take a look at spot volatility index, well, we know that that is still below its 50-day exponential moving average. The 50-day right now printed out at 2179. That is a bullish indicator for the S&P 500 out there. Let's go take a look at the NQ. Let's go take a look at the bad piece of the, or what else might be going on out here. So we'll switch over to our multi-set of time frame charts. This is the white chart. They should be populating your screen right now. In the upper left, you've got the NQ. The NQ is, you can see, testing both the top of its profile, and we know that it was testing a trend line. I don't have that trend line drawn in here, but price could pull back to 11,523. Nothing would be wrong there. That would just simply be a test and potentially a rejection of that green oscillator and change line. The 5-hour chart. 5-hour chart, TD9 count and Rhodes Momentum Indicator top out there. Price finding support at the bottom of its profile, 11,633. Certainly nothing broken there. The 4-hour time frame chart, Rhodes Momentum Indicator top, A to B equals CD down pattern that is in place out here. Now the current bar does not complete until, find out, I think that might be 12 noon if I'm not mistaken, but I don't want to be mistaken. So I'm going to give you the accurate information out here, and that is 2 p.m. So not till 2 p.m. So if this forms a bullish reversal candle by 2 p.m., that'll confirm a Gartley buy pattern. The 2-hour chart has the same set of, well, it has the Rhodes Momentum Indicator top. It's got that A to B equals CD. This chart here will complete at 12 noon. If at 12 noon we have a bullish, well, right now we're likely, well, I don't know whether we will or we won't. The candle that would be likely to form would be that bullish piercing candle, which looks like the 50% value is about 11,697. So close above 11,697 will give you that bullish reversal candle. That will confirm a Gartley buy pattern. You can see the A to B equals CD pattern drawn in here in the 60-minute chart. 60-minute chart does not have a bullish reversal candle, but the 30-minute chart, which has that same pattern in play, has a bullish hammer candle. That formed as we came on the air at 11 a.m. And price right now above the top of its profile, red oscillator and change line, that says prepare for a further rally, with 11,748 being the likely target. We'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Cakestat's Tiger Forex Report. Teddy Cakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we're going to go out to Martinez, California. We're going to speak with Brent, and we're going to take a look at D.H. Horton. Ticker symbol there is DHI. Hey, Brent, thanks for calling. Thanks for holding on. How are you today?
Oh, I'm doing well, Steve. How are you?
Very good. Thank you very much for asking. And D.H. Horton, is this a stock that you're in, and how can I best help you?
I'm not in it yet. I'm looking at it as a potential short, but not right now. If you look at the weekly,
yes,
it's a pretty obvious AB equals CD up, and we've already done I think it's like a 1 to 1.5 expansion of that C to D leg. And a couple of things that I noticed about it. It looked like it did a 0.618 retracement on that B to C, and just on its way up to those previous highs, it seems to have lighter volume. So I prefer to get it up to closer to that, older high to do anything. But I was just wondering if you saw any levels up there that would make sense to, of course we need a bearish reversal and the usual routine,
sure,
but if there's anything up there that you saw that would make sense.
Sure. So Brett was talking about, I switched over to the black background charts, folks. You'll see the center panel. That is the weekly time frame. I've drawn in the A to B equals CD that Brent described for us. He's waiting for a bullish reversal candle. If this was Friday's session at 4 p.m., he would have it, because that would be a bearish shooting star. But I have no idea what the candle is going to look like come day's end. Now, Brett, last week's candle was actually a bullish reversal candle for DHI. It was a key reversal bar. I'm going to expand out the chart here and just describe for you and everybody else a key reversal bar. So key reversal bar, the very first thing, it has 3 very simple rules, folks, that we need to follow. The first one is the market must be in an extended condition out there. Well, we've got an A to B equals CD. It's gone beyond the 1-to-1 level, so certainly this qualifies in my book as an extended condition. Number 2, the high and the low of the prior bar must be exceeded. I don't know, we can't really call it exceeded when it's going to the downside, but I don't know what the word is. But it needs to, get below and above the prior week's high and low out there. Well, that occurred last week. And then the final piece of it is price must close at least 1 tick, 1 pip, 1 penny, 1 whatever in the opposite direction. And that's exactly what took place. So the resistance level, so you did get on the weekly basis, you did get a topping pattern or confirmed sell the D point. And Brent, that resistance level or key area is 97.32. You might get a duplicate there. You might get and folks, even though this body is engulfing the prior candle, that is not a bullish engulfing. A bullish engulfing can only occur in a descending market out here. That is not what we have. This right now, the current candle looks like a bearish shooting star. So Brent, before I do anything further, any questions about the weekly chart and the interpretation that I've come up with so far?
No, it sounds good. I'm on coming down from my hike, so I don't have the computer in front of me. I'll just have to watch an archives. But
yeah,
I appreciate
no problem.
that.
No problem. So what Brent is saying is, hey, I'd rather short this as if it gets back towards the highs of December in 2021, maybe around the 110-ish area out there. The bottom of that swing point, Brent, is being tested as we speak, or is being tested this month, I should say. And that swing point has volume of 68 million. Today is the 25th. And it's only 40 million shares. And on a daily basis, it looks like this does maybe about 3 million shares. So this is going to come up light. But it closed above 97. So if it closed below 97.39, you would have a test and rejection of a monthly swing point with lighter volume. And then that would say, well, if we still have the weekly top in place and the monthly has given us a rejection of a swing point, then we go back to the daily time frame. When we take a look at the daily time frame out here, this had a TD9 count top. Now the TD9 count top, the actual high of that bar is the trading session. Brent, you probably know this from January 12th. And that high is 96.58. And price closed above that yesterday. So that pattern has been negated. So on a daily time frame, you would need some type of bearish reversal candle to confirm a top. We don't have that as we speak right now. So what does that say? That says I like your idea of of being careful here and a pause. Let me switch over and take a look at the white background charts out here. This is our multi-time frame. This is the 8 panel where I've got the intraday time frame showing us as well. So if we're going to see, if there's going to be a significant top, we should start to see levels of support fail out here. I can say that on a 15-minute chart, DHI still has a TD9 count bottom that is in place. So that suggests a bounce up to the 95, 92. So I would say nothing broken if I look at a 15-minute chart. The 30-minute chart out here, I would say at this stage here, it's got a confirmed Rhodes momentum indicator bottom, but nothing really broken out there that I see. On a 60-minute, 65-minute chart, price trading within profiles. So I don't really see anything of significance to the downside. So even though the weekly's got a confirmed top and the monthly may reject that swing point, the fact that the daily negated its TD9 count really does suggest caution here, and that maybe you're going to get this at a higher price. But right now you've got that confirmed top on the weekly, and you may get a rejection on the monthly. Does that help you out?
That does, yeah, very much so, Steve. For me, the risk reward is better just let it, if it does it, to go up higher, fully test that previous high on lighter volume, and at that point, take a shot at it if I get that bearish reversal.
Yeah, absolutely. Okay, perfect. Well, pay attention to your walking. We don't want you to fall or anything like that. And thanks for calling. 2 feet. How's the day out there? How's the weather out there today?
It's much better. We've had a number of clear days. It's been cold in the morning, frosty, but it's had a chance to soak in and dry out a bit. So it's all good.
Perfect. Hey, Brent, always good to hear from you. Thanks so much for calling. Have a wonderful Wednesday, and we'll look forward to speaking to you again soon.
All right. Thank you so much, Steve. That really helped a lot, and just have yourself a great day.
Will do. Got the Dow down 310 right now. S&P's off 44. Let's go to some questions that have come in. Let's get to those now. The first one coming in from Dan inside the Tiger's Den. Dan wants to take a look at ticker symbol CRDF. So let's pull that up on our screens out here. Let me make sure I'm on the right screen. I am. So in the case of CRDF, Dan wants to take a look at this from the long position side. That is Cardiff Oncology. So if we just begin with the daily time frame, Dan, what we like about today's action is prices pulled back and it has tested and rejected that green oscillator and change line. Dan, that's currently printed at 167. You'd love to see price stay above that level. On a weekly time frame, don't really have much up out here other than price trading with inside its profile, so you're Your support area is 144. Your first resistance point would be 232, and above that, 275. Monthly time frame chart just shows a bunch of accumulation that has been going on for quite some time out there. On a 30-minute time frame, let's pull that chart over. On a 30-minute time frame for CRDF, what do we have? We had a Rhodes Momentum Indicator top. That has led basically to a sideways-ish type move out here. So nothing really broken there. Everything looks okay. So you're asking to look at this from the long side. From the long side, I would say that your next battle, what this should do is make a move up to $1.92, and that's the top of the current profile. Now, this is a very wide profile, Dano, and the bottom and center, this is bullish and structured at 149 and 154. So if price did close, we don't have any signal that it will, but if price did close below that daily green oscillator and change line, again, currently printed at 167, probably would be 165 or so, 164, and a move lower. If price does close below that, that's telling you that it wants to get into that 149, 154 range. Otherwise, price should continue to move higher, with 192 being that price target. That was CRDF for Dan. He had a double, which is FUTU. And so we'll take a look at FUTU when we get back from the break. Maybe you want to put that up on your chart and see what you believe the charts are communicating to you. Steve Rhodes with TFNN. We'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back. Dow's down 297, S&P's up 42, the NASDAQ 100 down 181. We're taking like a ticker symbol FUTU, that is Futu Holdings for Dan, Insider Tiger's Den. Dan is in a short position here, and which is fine as long as price does not close above 53.52. 53.52 is the high of its TD9 count pattern, which formed on the bar following bar number 9, and a close above that would negate that signal. The following day, on January 23rd, the actual close was 53.51. So that pattern is still out there. Dan, what you'd really need to see in order for this short to get any kind of traction would be a close below that red oscillator and change line. That's currently printed at 51.39. A close below that should take it down to the 45.87 level. That would be the top of its daily profile. As long as price remains above that, though, it's questionable, and certainly a close above 53.52 would suggest closing out that trade. The weekly chart shows Fudu above the bottom of its profile and a green oscillator and change line. Those are bullish conditions. That could be signaling to move to 58.84. The monthly chart doesn't have enough time frame to really produce a good oscillator and change line, so it does have a TD9 count bottom pattern that should over time take price up to the 80.28 level. I don't have anything else. The 30-day at-minute chart doesn't really provide me with any additional information other than the sideways move, but we can kind of see that here on the daily time frame for the last four trading sessions at least out there. So watch that 53.52 level. That would be the area that I would be most concerned with. So Dan, thanks much for taking the time to write in and give me a couple of requests out there. Much appreciated. The next one coming from Bob in Spokane, and Bob wants to take a look at ticker symbol PTRA. And PTRA is Proterra Inc. It's trading out right now at 502. I believe the question was just to take a look at it. What we can see out here is this bottom with wave number 7. Very small portion of the Chapman wave out there. It's worthwhile to learn that tool, as well as all his Basil his tools out there. So wave number 7, 7th wave move, that was the bottom. Price makes its way almost all the way up to its TD9 count breakdown resistance level at 542. No top out there other than that. Things look pretty good. Now, this may pull back. I see this is day number 2 on its pullback. That may be it. Today's low may have been that next buy point, but you do have a battle at 519 and 542. On a weekly time frame, I don't see much out there to assist us. On the monthly time frame, it could be forming a Rhodes Momentum Indicator bottom pattern. That's what it would need to do to identify a bottom. Lastly out here, Bob, if we take a look at a 30-minute time frame chart, TD9 count top, no bottom signal here. Price pulled back to a level of support. So I'm not really clear what the 30-minute chart's intent is at this stage here. So we'll just kind of leave that off to the side. And so I hope that helps you out with regard to PTRA. In summary, looks like today may be the bottom. If not, then price might bottom out around 453 to 462. So thank you very much for your request out there. The next request coming in from Hector and Patty. They want to take a look at ticker symbol HES. Let's actually open up the question, see what it is that they're looking for. And it goes like this. Happy, wonderful Wednesday. Thank you. Back at you. HES on a weekly A to B equals CD. Please draw us which weekly A to B equals CD pattern you would prefer. So we're going to switch over to a different set of charts real quickly here. As I take a look at this on a daily time frame, Hess has got a TD9 count top. A close above the bar from January 18th high at 156.98 would negate that signal. We are in wave number 7 on a weekly time frame, but price is above the top of its profile and its oscillator and change line. So overall, its signal is bullish to neutral out there. And on a monthly time frame chart, things look pretty good for Hess. But the request was to draw in the A to B equals CD pattern on the weekly time frame. So to do that, we're going to switch back to those black background charts, and we're going to use our A to B equals CD tool. Now, when we open this up, let's pull this back further, make sure that we have a really good. So there are a ton of A to B equals CD patterns out here. Hector, when I see something like this, and you're asking me to draw in which is the active A to B equals CD pattern, I like to go to a larger time frame, see if there is a more dominant, more clear A to B equals CD pattern. And I believe the answer is yes. So that answer goes like this. The A point would be right here, the low. You can see that. That's about as clear. That's the March 2020 low. And then it makes a nice move up into a high on the trading week of June of 2021. That's going to be our B point. The C point is a 2-bar knee-jerk reaction low. You got to love that out there. And that's where price found support, which was also near its bullish structured profile. So it really does make sense that this becomes the A to B equals CD out here. We draw in our C point, and there is really the controlling A to B equals CD pattern. This suggests, because we're looking at the monthly time frame, this suggests a further move higher with a price projection of 167. 167.15 out there. And we took a look at that weekly chart on the white background chart. And on that white background chart, we did not see a topping pattern other than wave number 7. That needs a lower high to confirm. So if we're going to draw that same pattern in out here for the A to B equals CD pattern, that's that predominant one. Again, we're going to get the same figures, but it will look like this out here. We're going to the June high. That June high is the June high of when? That was June 14th out there, it looks like, was the high. And then the retracement down into the August 9th area out there. So there's your weekly A to B equals CD pattern. At least that's the one that I would use out here. And knowing that there's a Rhodes momentum indicator signal that has been triggered. Geez, are you telling me you guys didn't see that? Yeah, I think the answer is yes. Shoot. Well, here. So you can see on the right-hand side, you can see the monthly A to B equals CD. And again, the reason that Stevie went to that was because when you look at this weekly chart out here, you see a beautiful stair-step program. And that just says you've got multiple A to B equals CD patterns. What I really think that Hector and Patty were getting at is which one is the predominant. And that's why we went to the monthly chart, because it got rid of a lot of the noise, and voila, that's where we are at. So Hector and Patty, I hope that helps you out. Thanks so much for the request. Inside the Tiger's Den, Muckety Muck wants to take a look at Microsoft. Now, Microsoft out here came out with earnings last night. I will change to the white background screens in a moment, but right now, because I know that that a new profile has formed, is forming, was forming. Well, geez, it's not here right now. Okay, shoot. Okay, then I'm glad that I looked back at this. So we take a look at Microsoft. Then at this stage here, we're going to go back and take a look at my white background charts, because I wanted to show you the new profile that had formed. But in the last 15 minutes, that has vanished. That has gone away. So nothing there for us to take a look at. When we take a look at Microsoft, what we can see is the pullback today has been a test, and so far rejection of that red oscillator and change line. 236.53 is the number. If price closes above that, then that says, okay, it's ready to make a further move higher, most likely. If price closes below that, then we should see a party down to the 229, but more likely 227.27. That would be the target, but that requires a close below 236.59 or thereabouts, the current red oscillator and change line. You've got a good old consolidation going on in the weekly chart between 228.79 and 248.12, and a beautiful TD9 count bottom, a TD9 count breakout support on that monthly time frame. That says that over time we should see price make its way up to that 280 level out there. On a 30-minute basis here with regard to Microsoft, it was trading nicely post-market last night. Pre-market, it gapped to the downside. In the post-market, Microsoft at top with wave number 7, as well as a TD9 count top. Price has made its way back to a prior TD9 count bottom out here. So you've just got really a wide range move out here between support on a 30-minute basis and resistance as well, both anchored by those TD9 count patterns. So I hope that helps you out, Muck. When we get back from this break, we'll take a look at Apple for you. And for G-Man, we're going to take a look at GE. Steve Rhodes with TFNN. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Right now, we're going to go over and take a look at the charts here for Apple. This is for MUK inside the Tiger's Den. Apple trading right now out at 140.11. And what the Apple has out here, Muck, is a TD9 count top on its daily time frame. That formed a couple of days ago, January 23rd. That says that high is a real critical high. That high is 143.32. What should occur out here is Apple should make a pullback, and that pullback target should be that red oscillator and change line. The two targets really would be that red oscillator and change line at 134.70 and 136.51. That's the top of its current daily profile. What weekly chart out here has a nice bottom, trading in between channel lines, trading above its profile. That's a bullish signal. And on the monthly time frame chart, what do we have out here? Not really much, but price is trying to get back inside its monthly profile. To do that, it's going to require a close above 140.48. We're at 140.19 right now. 30-minute chart not providing us with a ton of information out there. So Apple, again, should head lower, with its targets being 136.51 to 134.70 or thereabouts. Actually, let's look at that 30-minute chart out here. MUK, as we look at the 30-minute chart, I don't really see much of anything other than price right now, consolidating with inside a profile that formed here at 11:30. So that's support at 139.21 and resistance 140.81. I hope that helps you out with regard to our review of Apple. And thank you very much for your request. That takes us off into the last request that we've got out here, at least the one that I know of, and that is to take a look at GE. That's for G-Man inside the Tiger's Den. G-Man, what were you looking for here? Let's see if I can find it. Steve, can you look at GE if you have time for a potential long position? So right now, as we take a look at GE, looks to me like it formed a sell the D point pattern, but let's, well, did it though? Did it complete it? So I don't know the answer to that. Let's take the easy one to complete. That means the shorter A to B leg out here. So that would look like this. We're just simply going to move this over to the C point and see if this, in fact, did go ahead and complete an A to B equals CD pattern. Well, it did, as a matter of fact. So this pattern was completed. You have a sell the D point pattern that formed out here when you got that bearish engulfing candle, and then you even gapped down the very following day. Now, that bearish engulfing candle formed on January 18th. What's important to notice here, G-Man, is that when you get a confirmed top, which it did, price should then go target its oscillator and change line, which it did. In this case here, it's green. Prices held that green oscillator and change line. That says that its momentum is still in play here. Price right now consolidated with inside that daily profile. A close above 81.18 is going to suggest that this is going to be on its merry way higher. Right now, the overall signal is neutral. We've got the confirmed top, but price above the green oscillator and change line. That gives us a neutral signal out there. If we look at a weekly time frame chart, as soon as we get over to that chart, what do we have here? We've got a larger A to B equals CD pattern. Well, maybe it's the same one. Let's find out. We'll just simply draw in that A to B level out there. Maybe Stevie's eyes aren't so good, and that's the exact same pattern that we drew in there. And the answer is, yeah, it is. But no bullish reversal candle on a weekly time frame chart. And knowing that the daily held it's a green oscillator and change line, that looks pretty good. Overall, what I would say is it got to clear 81.16, G-Man. And if it does that, what we should see is move up to 90.65. The monthly TD9 count breakdown level out there. Real quickly, if we take a look, it doesn't have to be quick or anything. If we take a quick peek here at the 30-minute time frame chart, we can see that, not much. Just a little sideways consolidation. So overall, you were looking for an entry point into a GE. That's a tough one because really the entry point would have been a couple of days ago when price got down to the bottom of that profile at 75.97. Of course, at that stage, you would have known that your risk was only getting up to 81.18, whether that was worth the trade or not. So where's an entry point out here? Knowing you've got to sell the D-point pattern, I think you either play this momentum trade to the upside, wait till that sell the D-point pattern fails, or wait for another decent retracement, maybe to a bottom of a profile like 75.97. So hope that helps you out, G-Man. If there's other information that you need, please let me know. We'll be happy to go take a look at that. And MUK, you are very welcome. One of the charts that Dan inside the Tiger's Den likes to trade is Sava, Cassava Sciences. Polar asked the question, did he know anything as to what was going on, why it's taken this large dump to the downside? Apparently was a trial that Dan says was uninterpretable. But here's what we know. This has a nice TD9 count bottom, and as long as price closes above that low today, that low is $27, that pattern remains in place. You're at 26.66. If it closes below that level, well, it's at least triggered a Rhodes Momentum Indicator signal. Therefore, a bullish reversal candle would be your next buy or entry point into Sava. Sava has been consolidating with inside its weekly profile. It's been doing that basically since October of 2022. And that level, which is testing right now, the bottom of which is support, which is at the 26.31 area. So the consolidation between 26.31 and 37.55. So if you did get a nice bottom signal out here, that could or should set up a nice trade. You've got a nice TD9 count bottom that formed in the bar following bar number 9, but its resistance level is the center of that bullish structured monthly profile. Again, that gives us a consolidating area up to the 41 level. We had 37.55 on the weekly time frame chart out there. So just since I have 2 minutes even still left out there, I thought we would take a look at that. Let me just check real quickly, see if there was any other requests that have come in via email. The answer is there is not. So let's just shift over here for a moment. Let's just shift gears, and those gears will take us back to the NQ. This is where we started the day out here. Take a look at its charts, looking for signals. I do expect, or I do anticipate, that price will close, the NQ that is, below yesterday's close out there. But on the 5-hour chart, it's got a confirmed, potential bottom. TD9 count top finding support at its bullish structured profile. You've got a potential buy the D point on the 4-hour chart. That bar does not complete till 2. At 12 noon, the 120-minute chart does complete. So we've got about 11 minutes left in the trading session from a 120-minute standpoint with regard to its bar's completion, and you have a bullish piercing candle. That has confirmed a buy the D point pattern. That suggests a run up to the 11,840 level. To confirm that price move up to 11,840, what you need to see is price close above the 60-minute oscillator and change line. And that's at 11,754. So price can close above 11,754, folks. You should see a run to 11,840. The 30-minute chart says, hey, we know we have a buy the D point pattern. I've cleared resistance levels. I want to make a move to 11,842. Again, not until we see a close above that red oscillator and change line on the 60-minute time frame, or at least begin to trade above it, will that be a likely outcome. Again, watch that 11,753, 4-ish area out there as we take a look at the NQs. 15-minute chart, On 10-minute charts, they say they want higher price as well. But again, it's that 60-minute right now that is the fly in the financial ointment. Let's go take a look at some additional. Let's go take a look at the semiconductor index, the SMH. So again, we'll pull up our 3-panel. It's really a 5-panel chart. You're just seeing 3 of the panels. That didn't work very well. So what's going on here? Let's get back. What we're going to look at? We're going to take a look at. Geez, Stevie, get your stuff together out there. What did I say? Well, I'll figure it as we go into this commercial. Steve Rhodes with TFO is the SMH. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. So let's go take a look at the SMHs here, which have a nice confirmed A to B equals CD pattern. They took out the swing point on the trading day of Monday, January 23rd. Volume there was 6.4 million shares, was taking out the B point that had 4.6 million shares. Now, the one-to-one price projection would get us up in the 254 level. The real battle as we speak right now inside the semis are at 235.80. That's the weekly TD9 count breakdown resistance level. The top of its profile is where we're trading right now at 234.59. But if price can close above 235.80, that would signal that the A to B equals CD pattern is on its merry way. Today is likely to be the 2-bar knee-jerk reaction out here. We'd get that if price closes below yesterday's low. Last time we had a 2-bar knee-jerk reaction, that actually set up the C point of the A to B equals CD pattern out there. So the SMHs, even though they pulled back and even though they're down about about 0.8% right now, they still look muy strong. Very, very strong. You got to love that. So to finish out the show out here, we've got about a minute left. Let's go back. We spent a lot of time on the NQs out here. Let's see if we can pop up the ES Mini, see what kind of signal information it may be providing us, but I do believe it is the NQs that are back in the driver's seat with regard to what the markets are doing out here. So in the case of the ES Mini, it's pulled back. It is tested and rejected its daily green oscillator and change line. That was at 39.78. Remember, the ES Mini also has a confirmed A to B equals CD to the upside out there. The 5-hour chart, price has found support at the bottom of its profiles out here. The same with the 4-hour chart. The 5-hour, the 2-hour chart, there's probably an A to B equals CD to the downside being confirmed with a bullish reversal candle. The ES Mini, if you look at those intraday charts out there, you see price taking out TD9 count breakdown resistance levels. All that suggests a further move higher is very likely. I would say the next price target to the upside for the ES Mini would be about 40.20, the 30-minute TD9 count breakdown resistance level. Folks, stay tuned for some great programming. My apology, I will not be able to be with you tomorrow or Friday, but I will be back with you live on Monday. So have a fantastic weekend, a wonderful Wednesday. Be safe out there, and I look forward to seeing you again soon. Take care.